Hello and welcome to Switzer Investing Insights, brought to you by NAB Trade. And today we want to talk about earnings season, and it's pretty well honest, isn't it, Paul?
Look, it is honest, Peter, and this is really important for the market because at the end of the day, share prices are ultimately about what a company's make in terms of profit. So just like we see in the United States, we've seen pretty big expectations in the United States, the earnings season here is going to be really important. Just to sort of put it in context, look, when we talk about earnings seasons, most companies, but not all, have a balance date of either the 31st of December or the 30th of June. They're required to report their profit twice a year. So we get about 80% of companies in the months of February and August updating the market about their profit for the recent half year and also their outlook going forward. So this is why sort of the focus comes onto this month in August.
The big story so far, like the macro level?
Yeah, at a macro level, this comes out of AMP Capital, looking for profits for 17-18 to be up about 7% compared to financial years 16-17. Very different in the different components. So the resources sectors, Peter, still up around about 20%, and the rest of the market up 4.5%. Now that 7% is a long way short from what they're seeing in the United States at the moment.
Yes.
For their fourth quarter up 20% on the corresponding quarter the year before. But look, we're seeing profit growth, and maybe those numbers might prove out to be a little low. Let's hope so.
Yeah, okay. So let's go and look at the schedule. What are the big weeks for reporting season?
Well, it kicks off on the 31st of July and runs all the way through to the 31st of August. On the screen in front of you, you can see the major companies that are reporting on a week-by-week basis. It's really back-ended, so we don't get a lot in the first couple of weeks, but by the time we get to week 3, that's the 13th of August, 39 companies and major companies are due to report. Week 4, starting the 20th of August, 71 companies are due to report, and then the last week it sort of tails off. So very much we have to wait to the end of August, but we'll get some of the leaders tend to be a little bit sooner in the earnings.
It sounds like an exciting 4 weeks for us, Paul, coming up.
It's very busy for market analysts and companies and also people in this business. So very important, and sometimes the news is not in the report; it's what they say afterwards.
Okay, let's look at the key companies that could be a big determinant on where this market goes.
Yes, I've picked out 8 or 9 of the major companies that I'm looking at. Let's start with the resource companies. Rio really starts the season off after the market closes on the 1st of August and BHP on the 21st of August. I think the key here, Peter, is not actually the profit number or even the outlook. It's what they do with a lot of the cash that they're spinning off, because both these companies are doing well in the resources business. They've They've reduced capital expenditure. They've been very disciplined about their cost base. They're now spending off a lot of cash. Commonwealth Bank on the Wednesday, the 8th of August. That, of course, is Australia's largest bank. Expectations are pretty low in the banking sector. New CEO at the Commonwealth Bank. So, look, question mark about what that means for his first report.
It'd be a good opportunity to blame the other CEO if he didn't like what he has to say.
Yeah, look, we won't quite put that on him, but of course that tends to sometimes happen when CEOs change. So, but also, I mean, expectations are pretty low, and so I think that'll give us a sign for the key financial sector. Really interested to see JB Hi-Fi's result on Monday, the 13th of August. I'm a great fan of this company.
Me too.
Retail's a very unloved sector. Partly because of the Amazon risk, but also the retail turnover numbers have been a bit weak. They're just turning, but they are just turning. Yeah, and it doesn't quite gel with some of the data around employment and all those sort of other things in the economy. So maybe we might be a bit of a surprise around JB Hi-Fi, although they've had some challenges around the Good Guys acquisition. CSL, market darling, 15th of August.
The gift keeps on giving.
The gift keeps on coming, over $200. A lot of people would like to take profits at $200, but I'm really scared too. Some of the analysts now have forecasts above $200, $230, I think, as some of the targets. CSL has already foreshadowed that it's going to be a good report. They do have a habit of surprising on the upside, but expectations are fairly high. Unloved Telstra on the 16th of August. They've really lowered expectations, Peter, so maybe there could be some good news, question mark?
I think that would be a great stimulus for the market if Telstra can come out with an outlook statement that really excites the market. We've been saying that for a long time.
I think that's a big if, but let's see Telstra. And then two other companies, because this market's been so focused on growth in the last 12 months, A2 Milk has been a standout. So, and also WiseTech Global, our IT companies have benefited so much from sort of the lead coming out of the what's going on in the IT in the US, and I think there are big expectations there. So market's going to be looking pretty hardly or very closely at the results from those two companies.
But Paul, Ramsay, I think that's on the 30th of August, a lot of people are wondering whether this is the right time to get in. A great company's been beaten up in recent
Yeah, it
times.
has been beaten. I'm still a little Ramsey fan, but it has done been a little disappointing in its last report, and so that again will be closely watched. It has bounced back a little bit off, got almost down to $50, Peter, but the market will be looking for what it's got to say, particularly around the outlook in its French and European businesses. Just how tough is that operating environment?
Okay, so let's just sum it up. What are you looking for in reporting season?
Well, first of all, I think it's important to state that just coming into it, we've gone through what's the so-called confession season, where companies, because of continuous disclosure, are really obliged to report anything they know.
Yeah.
Now, most companies by the 30th of June have a pretty good idea where the profit's going to land.
That's right.
Maybe not to the nearest dollar, but they know within the nearest tens of millions of dollars. And we've gone through confession season. We haven't had too many confessions. Now that's probably a good sign. So that means that generally any company that knows it's got a really bad number should have told us already. They haven't. I'm really looking at the outlook statements, Peter. I think that our market really the numbers are the numbers. That's history. It's really about what companies have got to say in terms of what's coming up, and that's probably the most important part of the statement. A couple of sort of warnings on both sides. I mean, the market's put a huge premium on so-called growth companies. And
A2 Milk, for example.
A2 Milk, we've seen it even with CSL, but it has delivered, and so has A2 Milk. But
And even Blackmores has bounced off its lows to be pretty good.
But again, a hit of a miss, and they're going to get really punished. So just be careful if you're holding some of the high flyers out there.
Yep.
Conversely, some of the so-called value companies, you could argue maybe your financials, maybe even Telstra.
JB Hi-Fi.
There's a few others. Some of the retailers that are in this sort of category, they've been really marked down pretty harshly. And maybe just a little bit of positive news could actually cause a surprise the other way. A lot of these companies that are short, the short sellers are active, are in that category. And I think so there's sort of a couple of things, but it's really going to be the outlook statement. And I think it just coming back to the macro level, we've seen our market rally. We're sort of following the US. They've had good earnings. We need good earnings here to really sustain our markets.
Yeah, and the reality is we are at a different part of the business cycle. The Yanks have really gone up. We're starting to go up. And I think this reporting season has to basically confirm that we are actually heading in the right direction. Maybe not as high as where the Yanks are, but certainly going to get up to a next elevated level for both the economy, profits, and ultimately stock prices. So that's Switzer Investing Insights brought to you by NAB Trade. Thanks for joining us.